All right, so among the many eye-opening revelations on the Nvidia call, the move up in hyperscaler spending, folks, again, Beth just mentioned there was only 5 of these names. $1.3 trillion. Now, what's amazing about this is Wall Street has actually penciled that in for 2028. Now it's going to happen in 2027. So what does it mean for these stocks, right? Think about all of the hand-wringing over this. At one point, Wall Street wanted them to spend more. Then they said they're spending too much. Where does it leave us? I want to bring in now Jay Hatfield, Infrastructure Capital Advisors founder and also CEO. Jay, I got to tell you, it's like, I guess this earnings season, because we kicked off earnings season, it was like Google, right? And they were showing, hey, they showed that they were making money with the cloud and that there was a return on investment. But Wall Street still wasn't sure. They don't want to see him spending. I call it investing, but spending this kind of money. The fact that this has moved up, is this good or bad, or how does this impact you? Because you own some of these names.
Well, of course, it's very bullish for chip stocks, and we have a lot of chip stocks in QVol, our NASDAQ option writing fund. But we have a totally contrarian view on this CapEx. We like companies that invest. Free cash flow.
By the way, that's old school.
We're very old school.
You invest in a business and it's going to grow. It's like,
And our view is that free cash flow is free until it's not. So cable companies had tons of free cash flow, but guess what? They should have been investing. They should have been doing streaming. They should have. So we're not free cash flow obsessed like a lot of hedge funds are. So we loved it when Amazon is spending money because we know they're getting very lucrative contracts, and that's a less risky business than making chips because you have 5-6 year contracts with locked in returns that are in the high 20s.
Right.
So we're bullish on CapEx. It's better if they don't overspend such they have to raise equity like Oracle, because then the hedge funds pound on you and try to pound your stock down. And
you become a target.
Exactly,
doesn't necessarily mean it's a bad business decision, but it makes you more of a target.
Yes.
And so you're still cool with Amazon. You're still long Broadcom. You still feel comfortable with those.
Yeah, those are some of our largest positions in QVol. Having said that, we have a 300 target on Amazon. We did fade it at 275, but now it's down even again today. We're adding back. So we're very, very valuation driven. So we don't want to own something that's pretty close.
Marvell is a name that you've liked a lot in the past. I think you still like it here. Again, I just talked to a minute ago with Ray about this. All of these names kind of pulled back. They're regrouping here. This is towing around the 50-day, and they report after the bell. You're holding this into the earnings?
Well, actually, we've been increasing our position. So the chart doesn't really work because of the announcement of the Google deal. So it's 120 billion of revenue over 6 years. This is not that big a company. That's an advantage of Marvell. So it's our number one idea, number one overweight. And so that hasn't been fully reflected in the analyst estimates. So we're carrying $12 in fiscal 29, which is really 28. The street's at 10. We're hopeful they'll guide, but they may not, just like Nvidia normally doesn't guide further out. But even if they don't, if you hold it long enough, you're going to get those $12 of earnings. We're carrying 16 for fiscal 30, which is 29. So this is a smaller company with ridiculously good growth, great execution, a broader array of products than Broadcom. So it's really our number one idea is Marvell, and you'll see that.
Number one, okay. Yeah. Financials, so you like Bank of America, Citizens, KKR. There's a little bit of buying around some of these private equity names. You feel like, particularly after some of the software earnings we've seen in the last 24 hours, maybe the coast is clear? Because that was one of the it wasn't necessarily a sword of Damocles, but it was a dark cloud.
Well, we think it was completely stupid for hedge funds to be shorting KKR because they're not even that big in private credit. And so that's really the catalyst is short covering. Like today is mostly a short covering rally. It's really like hedge funds blowing up. So KKR is rallying, but that's a phenomenal business, locked up capital, great earnings growth, great AUM growth, and not even really that exposed to private credit. So that's on the financial side, that would be our number one idea because the other two ideas work better when the war's over.
All right, let me just ask you before I let you go. I read somewhere that you're saying that essentially Kevin Warsh is a dud. You've already assessed that he's a dud. Now, Bloomberg opinion says he owes investors a Jackson Hole reset. He's under a tremendous amount of pressure to fall into line and act like every other Fed chair before him, abandon whatever he said. I thought he wanted to remake the Fed. I still believe that, but you've come to the conclusion that no, he's a hawk, that he's the wrong pick, and President Trump has made a mistake.
Well, historically, he was a total hawk, and he's come out very hawkish. We're hopeful, although there's no real evidence of this, that he's being hawkish to stave off the even more hawkish
Right.
Democrats who are being prosecuted by Trump. So they're major Trump haters. And we're hopeful of that, but there's no real sign. He hasn't really indicated that. But the one thing I would focus on is he has said he wants to get rid of PCE as their focus. PCE, Stephen Mirren did a great job this morning saying, is it just complete garbage? So if he makes that one reform, that will save him. But so far, he's talking tough. I'm hopeful, but I have no evidence of this. He's just doing it to stave off the Democratic hawks on the committee.
And just so you know, folks, right now, like it's been said that he wants trim mean, which is 2.3% inflation. PCE headline is 3.7. That gets his way gets you a lot closer to the target, and it means you have to be a lot less hawkish if you go that route. Thanks a lot, Jay. Really
Thanks, Charles.
appreciate it.
Great to be on.